Good morning, everyone. Welcome to TopstepTV. My name is Deeyana Angelo, and this is the London session. We're going to be looking at crude oil today and metals. That's something I specialize in. I did try like a little feeler trade on crude oil here, which I'm going to explain the reasons why. But it was just the one lot to test the waters. As always, for the beginning of the week, I always start on a massive time frame to have a look at where we are in the chart location, and then to try and figure out whether the context of intraday actually matches what we are seeing on the large time frames. So one thing that stands out for me is the reversal that we had last week. So clearly we are looking at, this is called a 3 inside up pattern, but it is a 3-bar reversal, so that's something not to be ignored whenever you see it. And now our, I suppose our homework will be to figure out whether we have any cause for longs intraday as well. So we are in a lower volume area, and we have some balance up at 71.25, just looking at very, very large time frames, right? Now, the market just opened, and crude oil, this is not its main session. So some of the setups that I take during the main session generally have much higher probability of working out. So we're going to be doing combine trading here until we wait for DAX to come in to Topstep and to, remove that risk in light of that. All right, so that's the weekly chart. Now, daily chart, let's have a look. Same thing, I'm just going to make the volume profile a little bit wider so that we can see what's going on. Audio a little bit low. Okay, hold on, let me see. Let me see if I can push up the volume of my voice today. All right, is this a little bit better? Maybe get this closer to me as well. Hopefully that'll be a little better now. I'm not the loudest today. Okay, so daily chart, yesterday's candle, which was a Sunday, tiny little candle, obviously, so I would be looking for a continuation upside. If we start to break down through some of the more relevant areas that I'm going to talk in a minute, then I have some levels further down. Specifically, I have the London value high at 68, which is a nice round number. That's also where some put support is located. So that would be a valid level to aim for. However, the setup for that for me would mean we are looking at only 38 ticks before we hit that. And for me, that's a little bit low for a profit margin on the trade, so I probably won't be taking that. And I would be looking to just see what the price actually does around there. But that is where the weekly demand and that daily demand is located. If we don't manage to hold at that point, then we are looking at further levels down around 67.50. And notice that all of these levels of interest, they're sort of like round numbers. So they're 68, 67.50. And that's something that crude oil really loves to do. So if you're going to trade crude oil, that's something to take note of. Some of the larger players will always get involved at sort of 0.5 increments, and sometimes even at 25 cents increments as well. So it's always good to match up your other levels around those areas. Okay, let's go down to the 30-minute chart. So this is what I was talking about earlier. So value high is at 68, well, 67.98, and then we have that gamma wall level at 68. Average session range for London is also further down at 68.22. Now, if we don't reach those, that is also an information that is very important. What doesn't happen is equally as important as what does happen, right? So we're gonna see what the price wants to do. For now, we have the bullish engulfing. So it's a 2-bar reversal from overnight VWAP. So these longs are still in play. And I'm going to be dropping down to a super low time frame to look for another entry until that level breaks down. So until we go below 68.37, that would be my invalidation point for this particular trade, longs on crude oil idea. We start to break down, then that's something else, and I don't want it. All right, let's have a look at Nikkei, because in absence of DAX, Nikkei might be an option, even though it moves very slowly for London. Its main session is obviously Asia, and this is the CME contract where the volume is not that great. So again, let's start from a very large time frame, as always. So we have the weekly chart. Right now, we are trying to test a supply area with quite a bit of volume inside it. So if we manage to get a reversal from there for shorts, that would be great. If not, we're looking for further push towards the 41,000 area, where the next weekly area of supply is. Now, when it comes to supply and demand areas, someone asked me last night on my Q&As on Instagram, can we only use supply and demand intraday to trade? Now, obviously, this is just my opinion, you know, obviously it's not like any kind of a signal service or anything, but my experience was that I never found that supply and demand gives me enough information. So it's always to do with, you know, where are we opening? And ultimately, supply and demand is one of those strategies that only has one type of a trade inside it, which is a reversal, right? Is that enough for intraday? I would say no, because you don't have the details about the day type. And day type in intraday, extremely important. You need to know whether we are in a trending day, whether in a range-bound day. And in the profile concepts, you can actually start to hypothesize and, you know, to have maybe not hypothesis, but maybe a supposition if we're maybe starting a trend. And that's the appearance of single prints upon the price leaving the first hour of trading range. When I say first hour of trading, that is always going to be relating to the current active regular trading hour session. So for London, that is from 8 a.m. till 9 a.m. and that's 2 a.m. Central up until 3 a.m. Central. And then obviously you have NYMEX, you have COMEX, you have New York Stock Exchange. Depending on the product that you're trading, those assets will have different start times. But the premise of hypothesizing a trend day in anything is when the price leaves the initial balance with the first hour of trading with quite some force, and thereby at the print of the following candle creates a gap above it, right? So it's like a big push and then it creates a gap. That is the first sign of a potential strong trending move. And whenever I see that, I try not to go against it. That would be like an invalidation signal for any failed auctions that I might be looking for. So if I'm looking to, you know, fade something and then I get the single prints against that idea, I will just sit out and go, okay, what's going on? And then see whether I can maybe limit my risk using the overlap of the two new candles as a very, very low risk way to run a directional trade. So those are just some of the ideas. But supply and demand on its own for intraday, I actually have a big problem with, because the supply and demand areas on low time frames are also very sketchy. Because they don't have enough trading information inside it, right? When you're looking at a daily chart, in order to create like such a big move, right? In order to create anything that is visible in such a big time frame, you need a lot of trading information, right? So there's a lot of trading that has gone on to create this reversal on the daily chart. So naturally, the supply and demand areas coming from that kind of information will have more volume, more information, and will be more relevant. But when you drop down to a 5-minute chart and you go, well, this is now creating a supply on a 5-minute chart. Well, yes, but this is not that much information. So what happens with supply and demand areas is that they will frequently get obliterated, right? And it also depends on the time of day when you're trading. Clearly, if you're trading the open for NYMEX, anything that was done in London, if we're still floating around the same levels, they're just going to run over it like it's nothing. And this has been something that I've observed over the last 17 years, because supply and demand was the first thing that I was doing as a swing trader back in the day. So I know it really well, and I just don't think it's a, you can be used as a confluence, absolutely, but when it comes to actually looking at trade locations, it's just not enough. So therefore, if you're struggling intraday, that's probably why. Like, one example is if you're in a range-bound day and you're hitting let's say a 10 or 15-minute supply, and yet it's a range-bound day, what's going to happen is that they're probably going to run the session highs and run over the supposed supply and then reverse. So it's a completely different way of looking at things. Rather than going, oh, it's just a supply, I'm going to run a reversal trade. Similarly, if you're only looking at supply and demands, I always found it very difficult to get back in on the move. It never really provided a good opportunity. Like, once you're away from the level, if you're only looking at ST zones, how do you limit your risk if you're away from a zone? So let's hypothesize that this now falls away. Where would your risk be? Well, you can't put it up in the supply because we're not there anymore. If you put it up over the high, that's too much. There's too much risk. So therefore, you're not going to have enough I suppose the risk would be too much, or also a problem of risk reward, right? You're not going to have enough profit margin on that trade, because now instead of risking, let me grab this tool. Let's say instead of risking just a little bit, if we kind of move so much away from the original zone, now you're increasing your risk, right? And then you might be looking at the opposing zone, let's say somewhere lower down around average session range low. That's minimizing your reward. So to me, that's always been very uncomfortable. And I try to find opportunities with larger risk rewards at the expense of accuracy. So to me, I need other pieces of data that will help me figure out what the hell's going on. Oh. Welcome to the multi-dog household. This is what happens when somebody rings the doorbell. Everybody goes nuts. Quiet one. Quiet. We have one of ours. Yeah. I'm letting them bark. I just don't. Yeah. Good morning. In case anyone was a little bit sleepy, hopefully that woke you up. Certainly woke me up. Yeah, so, Bon, be quiet. Be quiet. I know, you're a big watchdog. I get it, yeah. So, this is one of those things where doesn't matter. Like, they just get used to anything. They get used to the Ring doorbell, getting the vibration notification into the phone, and they just kick off. So I do apologize. So Yarden, Dakota doesn't exactly trade supply and demand. He trades support and resistance, but he also looks for reversals from those areas. So he won't like just do or die enter a trade. I know he says that everything is like really simple, but there's a lot of complex things that he does in his trading. And also he looks for bigger chunks of the move. So that always comes with slightly lower accuracy, but bigger risk reward. So if you're somebody who can handle that, if you can handle just going, okay, so I'm going to have, 30% accuracy and I don't care if I lose, 7 trades out of the 10 trades that I'm going to take. I'm cool with that because I have positive expectancy. That is a confidence that many people don't have. So the problem with lower accuracy systems is that they are psychologically difficult to weather, right? So we have, crude oil is actually going below, almost below my level of interest. So for now, longs are not on the table anymore. So we're going to see what happens around 68 evens, because that's my next area of interest. With the lower accuracy, like I said, I found that whenever I say that to people, they're like, what do you mean? But I like 60% accuracy. Like they like to be right. But some traders have evolved far enough to not care if they're going to lose because, there's confidence in the approach. There's confidence in the positive expectancy of the system over time. However, most people want the 60-70% accuracy and they will sacrifice the amount of ticks that they get, even if it's a negative risk reward, but because they love being right, they kind of have a bit of a false economy going on because it's like, I don't like losing. Like nobody likes losing, right? No one likes losing. But there is a thing with, like, for example, I like the bump trades. So where I find a very good opportunity for an intraday swing on a particular day of the week, and then I just run that for like 120 ticks. To me, that's much better than having a trade where, I just grabbed 10, 20 ticks. Like that's something that never worked for me because I would always feel that I know what's going on. So I'm like, well, why did I just take 10 ticks out of that when it went 100 that I actually had in my plan? That's something I always have in plans. And maybe also because of the areas that I choose, I tend to find areas that have more juice in them, that have those abilities to reverse from significant areas. But if I do get a sustained auction with enough profit margin to the next available level, I will absolutely take that as a breakout trade. You will also see Dakota do quite a few breakout trades, right? So is that really supply and demand doing breakouts? No, it's not. It's slightly different. So he has his own system, which is, working for him. But I do know that you give the same system to 100 people, you're going to get 100 different results because one person will be uncomfortable holding something for too long, another person will be too early, so therefore they might need to use a larger stop. But if they use the same stop, they will get stopped out of the trade. Then you have somebody else who will only take the tiniest chunk. Then you have another person who will hold too long. That's like a rarer problem to have, but I've seen that happen as well, where the trader has unrealistic expectations about the size of the move they're catching. That's also a big problem. If you come into intraday markets and you're expecting every day, multiple times a day, that you're going to catch a 10R multiples move, you're going to be waiting forever. You're going to be missing out on perfectly statistically viable 2R targets and 3R targets in favor of, chasing that one big move. And then day after day after day after day, you come, you lose, you aim for 10R, you lose again, you aim for 10R, you lose again. And before you know it, you've made a big dent in your account, right? And then what happens to people? They start doubting themselves, right? They're not thinking about the positive expectancy. They're not thinking about probabilities. And generally, they have no confidence in what they're doing. So now that lack of confidence is weighing on your mindset, and you start doing stupid things. You start stepping away from the system. And you're like, oh, maybe I should try another indicator, or maybe I should try this, maybe I should try that. it's something to think about, where you need to match the system you're using with what you're comfortable with, right? There's no sort of like right or wrong way to do this. You have people who are perfectly happy doing scalping and it works for them. It is a tougher way to do things because usually scalping works only for a very small amount of people due to the amount of self-discipline required. And then you have people who are completely happy being somewhere in the middle. So that's kind of where I fall. Sorry, one of my dogs just went over my screen and decided, can you settle, please? He just casually walked over the lead of my screen, tripped over, and managed to mess up the connection. Okay, we're back. So you have to find something that works for you. For me, it's trying to catch a decent chunk of the move, even if I don't catch like all of it. I try to get sort of at least 30% of the average session range for that particular session. And that's like enough for me. I also aim for statistically viable 2-hour targets. So I aim typically for about 70 ticks by default. But if I get like 60 ticks, 63 ticks, that's absolutely fine for me. Let's see if this crude oil is going to fail the auction. So we need to wait for 6 minutes for that to happen. Let's have a look at Nikkei in the meantime, just to see what's going on there. Yeah, I mean, it's very slow today, so I'm probably going to stay away from it today. But on the daily chart, we have a bearish engulfing. So we have a newly formed supply that did go over the previous session highs. Now, if we go into the weekly chart, things actually become a little bit clearer as to why that happened. So we had a weekly supply that was tested twice, maybe even 3 times before we went higher. And if you see this big supply here, that's where we're located at the moment. So shorts are of interest at this point if we manage to hold this area. If we go higher again, I will be looking for targets closer to 41,000. But for now, this is an inside day. We're just ambling around and nothing's really happening. And it kind of failed the auction, but it's just the sluggishness by which we're moving today is not exactly appealing at the moment. Crude oil longs, like again, if we fail the auction to the downside, still remains an interest. I would like it to happen around 68 though. Because right here is a bit of a no man's land. The only reference here that we can fall back on would be maybe midnight New York Open, which was a 68.44. And then I also have that average session range London low at 68.23. But right now, because we went below the initial balance, I want to sit and wait. So yeah, but Nikkei, if we manage to hold this area, shorts will be of interest to me because it is effectively a second test of the supply. But remember, this is such a massive area. It only gives you a directional clue. It doesn't actually give you a setup. It doesn't give you a proper trade location for intraday. If you're a swing trader, this might be something you might want to consider. But we're not swing traders, we're intraday traders, and we cannot hold swings like that on Topstep because they want us to be flat at the end of the day, which I actually prefer because I never sleep very well whenever I have a position on. Got always like one eye open, staring at the phone. And that's one of the reasons why I moved away from swing trading back in 2012. Like I still have a stock portfolio and stuff, but that's like entirely different. You typically check that like once a month and stuff. But yeah, for intraday, we need some stronger signals and let's say a different sort of an edge. So these large time frames are just so that you're aware of where you are in that extremely large chart location. Now, dropping down, let's go to the 4-hour chart. You can see that there's some interest around 39,100. So that's where the 4-hour supply lays. And I wouldn't be surprised if we go up to test that, because that is where we came from. It tried to go higher. Now we're in danger of creating base rally up to the 39,000 area. So right now things are not that clear, and the larger time frame is actually clashing with the lower time frame. Why? Because we are reversing, creating a new demand, and yet the auction for London is failing. So that is conflicting information. We don't want to see that. We want most time frames to be in sync. And that's a hallmark of a decent plan. So if you're in supply, if the market is struggling around supply and then it fails the auction, that's generally a stronger signal than whatever we've got going on here, right? Demands, we've got demand levels on a 4-hour chart, which are significant enough. We have failed auction to the downside that does match a weekly chart location. But right now we're not really seeing any commitment from either side, really. If I was going to say where this is going to go, I would probably go for longs and then maybe a failure outside of value, because we are very, very much inside value and just kind of not really going anywhere. So this means that we haven't moved away from the value area on Friday at all, which means that Asia didn't really do much. So yeah, very range bound on Nikkei today, so that needs some time to marinate before we do anything with it. Okay, let's have a look at gold, because I haven't really looked at that recently. Same thing, let's start from the weekly chart. Yeah, somebody says, Astro Gumbo says, we are trading the New York soft toss. Call London. Absolutely, man. That is how I feel trading some of these instruments during an out of hour session. Like some days you can have crude oil and gold go absolutely bonkers during London, but that's not the norm. That's like an outlier. And what happens on those days is that you're gonna generally have a pretty main session, because everybody already made their money out of hours. So it's like, let's just go to the pub now. So yeah, gold, another all-time high last week. Yay, right? I don't like all-time highs. I don't think that anyone is super excited about trading around all-time highs, because things become murky. This is from last week, so let's delete that. Okay, so it looks like crude oil might be failing that auction. I'm going to have a look at it on a very low time frame in a minute. This is a combine, so you can be a little bit more aggressive with your punts and taking certain trades that are maybe not as high probability, but they have a good chance of doing something for out of hours. My choice of trading the London session when I'm trading my own account is DAX, but we obviously are still waiting for DAX. Doesn't look like we're going to get it any time soon, sadly. I know many of you have been waiting for it, but it is what it is. Like, we just have to lump it, right? So gold on a daily chart seems to have had an attempt of reversal, but look at this. Like, look at this buying wick. So there's a big buying wick. If you can see that big buying wick, and to me that spells a failed attempt at a bearish engulfing, kind of like you have the dead cat bounce. Well, this is kind of the equivalent. It's like we tried to go lower, but we failed. So this is still bullish to me. It's just I'm really not that that happy trading all-time highs. Sometimes if you get a failed auction up to the downside, and then you want to run a long, and then you're effectively looking to go all the way back up to the all-time highs, high of the day, that could be a very good choice. And let's see if we have anything of the sort. I'm just going to use my other charting. And let me go down. Right, we did open with some gap. The gap was not closed so far. And as I'm doing the analysis, we're still inside the initial balance. So that means other time frame participants have not appeared. This is all just market maker activity. Until they appear, I don't really want to do anything with gold. But yeah, at least Asia has done something. So they moved away, as it seems, from London value low, which is quite interesting. And then your typical reversal on gold for the Tokyo Open happens a lot. So let me show you that on a 30-minute chart. So this was where the London value from Friday was, somewhere around 26.84. Now, this is London value low, not COMEX value low. COMEX value low is at a different point and quite further down. COMEX value low is at 26.66. Nice number. And yeah, so Asia kind of moved away from the London value low. This is the Tokyo Open. And then we go into a classic reversal from the Tokyo Open. And then yet again, London opens. What does it do? It reverses Tokyo. This is something that we see on gold happening quite a lot, but to a degree that can happen in other products too. In fact, whenever this sort of thing happens on DAX, I call this the Frankfurt fake out, because DAX starts trading on a very small exchange called Eurex. And generally, volume-wise, it's a tiny exchange. So when London steps in, it just obliterates all levels and reverses. So it effectively gives you a fake out to one side and then a reversal, capturing a whole bunch of people. Again, somebody mentioned liquidity sweeps in the chat, and yeah, it's something that happens a lot. Doesn't matter what the product, if you have a nearby session high, session low from the previous session, and then we open somewhere in the inside of that range or at the sort of proximity of session highs or lows, you can almost guarantee that they're going to run their stops for those liquidity grabs and then reverse, and then you have something. So those stop runs then reverse. Those are some of the trades that I like to take during London as well, if they offer enough opportunity inside them. Now today on crude oil, again, overnight low is all the way into the value, right around that 68 area. So as I'm, analyzing the charts, that 68 price seems to come up a lot. So that's definitely an area to look out for any kind of stronger setups. When I say stronger, meaning has more ability to bring us a larger chunk of the move, rather than scalping in between, away from those levels. But if we are, in a range-bound day, I will absolutely scalp the stop run, and then I just run it to either the point of control on the day or to the middle of the range, or even like overnight VWAP if it's somewhere in the middle. But today we don't seem to be anywhere near those levels, so that immediately means lower probability setups, because you don't have those session highs and lows that market makers love to take out. And it's nothing mean. Most people who come into this business, they're like, oh, they ran my stop. Yeah, it's because you placed your stop at a stupid place. I lost the other trade because I was trying to use just a 19 tick stop, because I didn't want to lose more than 20 bucks, so 20 ticks. And that generally doesn't work. I mean, a better choice for the this particular move would be if we go below 68.30, so below this low, and then we take out the Asia low somewhere near value high, grab some orders, and reverse it. So that is what the most obvious setup would be. Anything apart from that would be getting paper cuts. So I basically got a little paper cut trying to front run a trade idea, which is fine as long as you don't keep doing it, just paper cut after paper cut after paper cut, and then suddenly you're down like $2,000 and you're like, and then it gets to your level, reverses, and you're not in it because you don't have any risk left on the day. You ran out of money on the day. So yeah, 1 paper cut, okay. 2, 3, 4, 5, probably not the best. So patience and discipline, stepping away, doing something else is then very much needed. Aaron trades at all-time highs. You don't want to be trying to sell tops. I absolutely agree. This is why a lot of us don't like trading, because all-time highs, they just scream like, please fade me. But that's not the best choice, right? Because there can be quite some power in people that are making those all-time highs. So therefore, I've known people who have lost their shirts trying to short equities during the big bull run after the credit crunch. They just kept saying, well, how much higher can it go? And remember, guys, that for the upside, there's no stopping point. We're not at the top until the top is already in place. And unfortunately, many people didn't get the memo. So, fading all-time highs is not good. Also, the reason why last week, Nick Fortick and myself were actually not in favor of shorting NQ or ES, because ES was at literally around all-time highs, not too far away from them. And in fact, I think we made an all-time high, was it during fast markets or maybe a day before or something? And we're like, yes, we see a setup. There is a short setup. We can all see it, but we didn't take it. Why? Because it was risky. Because it's like, we're going against the trend. We're going against everything here. And it's a risky setup. So what we wanted to see was a rotation down to that 57.75 area. I wanted to see a takeout of the London lows at 57.73, which actually did end up happening, but it was just much, much later in the day. And we weren't on fast markets. But that idea actually did work for about, I think it was like 8 or 9 points. So, we would have gotten about 36 ticks out of it, which is not that terrible. And then ultimately it did actually reverse. I think it was the next day, same area, same everything. And then we had a very nice long from there. So you don't want to be doing stupid things like shorting all-time highs, just in case that the buyers do have enough power behind them. This is why we all say we don't like trading all-time highs, because all the setups that are popping up are to the short side. And you're like, ooh. It's just like an iffy setup that makes everybody like a little bit uncomfortable. If you traded for like any length of time, you're just sitting there going, ew, ew. You just want to like throw up whenever you see all-time highs. Yeah, and Aaron again in this whole chat comment, you just hit the nail on the head. Be careful with overall buying with so much profit taking. Yep, we just have to react off of our intraday breakouts, short-term plays only for me. Yes, so this is gold, right? That is 100% in agreement. Aaron, you're showing a lot of skill there. So very wise words. I fully agree with you. Yes, loss limit bonanza. Joe Chikongo says, do you consider IB edges as entry points? It will depend on the context. So, for example, if we're opening with a gap, and I'm looking at a gap fill, I will consider a break of the initial balance as a potential entry. Similarly, if I see a fake out, aka a failed auction, and we are at a relevant level, let's say that we already had a gap fill, which is one of my favorite setups. You have an extended move up to the value edge, and then it reverses. Yes, I will take initial balance edge as a potential area of interest and maybe even an entry point, but price action will be mainly my guide, and also I will look at the tape to see that we are getting that snowball effect of a whole bunch of other people coming into the opposite side. So yes, initial balance edges can be entry points, but they're not, like, I think the problem with people looking at the initial balance is that they're looking at it as a breakout only. And it isn't, it can be a very good reversal area too, especially if you're in a range bound day and then you're looking at the price that has printed the barcode for like 3 hours and you have the extension of both sides. So you have breakout attempts and fake outs to both sides of the initial balance. That's a range bound day. So unless you get single prints to one side of that as a proper breakout and a move that was actually sustained away from that area, you can just safely fade them. That's what Dolby does, right? Now he also does like his other things like Dorito and stuff and everything, which is basically a triangle that just kind of diminishes with volume and with range over the session. But generally, it's for me, it's always been safer if I already have a failed auction to one side, then we kind of rotate all the way through, and then we break to the opposite side. That's a very high probability range trade to that new break, right? So I'm fading that. And those are the setups that for me have worked about 80% of the time, right? That is actually something that doesn't happen that often, especially not in crude oil and gold. But when it does, I absolutely jump on it with like full size. That will be one of the times when I will go in with like, 7 lots, no problem, because you can limit risk really well. So it's a smaller stop loss typically. And to give you an example, in crude oil, when that does happen, instead of using my 35 tick stops, I can actually limit that to 12 to 17 ticks, which is quite a big reduction in stop losses. And then because of the probability of the setup, I bump up the size even more because I don't think I've lost many of those at all. It's just a very, very high probability setup. But can we use it every day? Well, no, because, range bound days are frequent, but they're not that frequent. You need to have a pretty perfect range bound day setup where we've, failed the auction to one side, we're extending to the other side, and then you see a relevant level somewhere around there that you can also back your idea from. That's a super strong setup. And it won't happen every day. It's probably going to happen, once every month or so, where you get the perfect range trade. So yeah, the sizing for me, it will depend on the strength of the setup. If it's just a normal sort of standard, touch of the value high, we're not sure whether we're failing the auction or whether we're going to go into value acceptance, I would just use like one lot. It's one lot, 35 ticks, leave it alone, right? For crude oil, since it is confirmed failed auction, we haven't confirmed really the failed auction. I mean, we tried to go lower, but the price action on 30 minutes is not matching up with that idea. Why? Because we've made a drop-based drop. So this is where supply and demand can help you with context. So what happened is that we tried to go higher. The first bullish engulfing failed. That's the first bad sign for longs. And then we went into another smash through the lows, failed the auction seemingly, but created what? Another supply. I don't want to see supplies when I'm about to long, especially not this close to my potential entry price, because what's going to happen is that we could have trouble around the VWAP, which is at 68.62, and then you're just going to get smacked all the way down. So I want to see a clear setup. Let me see if I can find that. All right, so let's imagine that this is also a failed auction, and this is what happened prior. So we had a very nice drop, no supplies, no opposing areas whatsoever, and then let's say that we failed the auction somewhere around here. That's a much nicer looking chart because you have nothing in the way, right? That's what I want to see for a failed auction. But if we have a bunched up things on in the way to that, like for example this one, you can see the result of that. Here VWAP was actually further away, but you can see the same thing. Even if this was a failed auction, you had the first problem that will certainly add time onto the trade. This is a 30-minute chart, by the way. So you had potential for a failed auction, but it creates a supply. And what happens? It starts to wick around the supply. And eventually, this is like 30, 60, 90 minutes, 120 minutes later, it makes a pitiful move of like 20 ticks or so, hits VWAP, cannot go above it, and just goes wow, 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 and then that's done. So that would be the quality of the trade that you're looking at. So I want to see very clean price action if I'm going to run a failed auction. If it's not clean, it's going to add a whole bunch of problems, time, mental capital, and it's just going to it's going to hunt you down, right? It's going to it's totally going to seep into your energy levels. You're expecting a move and you're like, is it going down, is it going up? And you don't want to get involved in setups like that. You want setups that will be clean. So even though I'm looking for a bigger chunk of the move, I'm doing so because the market is presenting me with space. There is no opposing areas on the way to my target. So, it's a very specific thing. So in fact, if you can fall away from VWAP and then fail the auction, or maybe even do an auction fade, which is my concept, that would be a better choice. And then what you're doing is maybe you're getting involved, let's say around 68 today, and aiming for 68.50 where the first supply is located, and point of control and VWAP, that would be your target. So right now, the way I'm seeing this, just using market generated information, is that we are moving away from the problem area, and once we move far enough away, that becomes an option. And then you have two choices. You can either run the trade up to the area, or you can run the trade from that area. So it's market generated information, MGI, right? This is how you would change your mind on the fly, and you do see a lot of us doing that. When you're like, oh, I'm long, but then something develops a little bit further and you go, actually, no, now I want to be short. And this is why. It's not because we're like, oh, it's going to go long or short. No, it's because the market is ever evolving. And as the signals are coming in, you get more information. Can you look at copper? Yes, I can look at copper. I'm going to have some tea as well. Somebody was asking me whether I'm feeling better, a little bit better, but still not fully there, which is why my hair is just all messed up. I couldn't face doing my hair. It's the bane of my existence. Copper, yes, let's have a look at copper. So, I haven't looked at copper in like a while. Okay, starting on the weekly chart, as always. Because I haven't looked at it for a while, again, starting on a super large time frame, we had to pop into the supply and a prompt reaction from it. So technically we are at the top of a swing. I have a concept called Q points, so this would be a quartile high, Q high, comprised of a supply and then a slightly more zoomed in area, but basically it's the top quartile of the move. For those I want to see the prior move, so sort of like a look back to see what happened in the previous swing. So I don't want to see like a speed bump. I want to see a dedicated move before I start to measure whether we are at the swing extreme or not. But that's mainly for algorithms, so not so much for manual trading. And now on the daily chart, I mean, it's just sell, sell, and sell. If you're hearing snoring, that's my Pomeranian deep in REM sleep, obviously. Strangely enough, we've just sort of popped outside of the initial balance range. Let's have a look at the 4-hour chart now. Having trouble around that overnight VWAP. We did open above value, but we promptly went through the value, so it just rotated all the way through it. So that happened during initial balance. So let's see. Initial balance was here. So that was your initial balance. Therefore, we just poked outside of it, tried to go further, and now it tried to turn away. There could be a short here because anytime we have a value acceptance that is completed, I actually look for further moves. So I will not really run failed auction trades against the value acceptance shorts because that's like two conflicting things. And usually, now every time I say usually, it means that I've done like statistical research in this. So basically, most of the time you won't stop at the value low. It's going to go much further. And that means that any kind of a failed auction against that is just a fake out and maybe an opportunity to go in on a short. We still have some ranges, average ranges, statistical ranges, algorithmic ranges, down to 459.34, which is the average daily range. Now, what do I have here? Let me just see where settlement is. Settlement on copper is earlier, isn't it? From what I remember, I think it was, so gold, or does it close? Or is that platinum? I know platinum closes like 5 minutes after lunchtime in New York, but I can't. Can somebody remind me what settlement is on copper? My brain is just like completely gone blank. I think it's not the same as gold, so it doesn't settle at the same time. I don't think. I think it settles a little bit earlier than that. Salty puts coming to you from Florida. Dee, howdy, babe. Yes, I'm good, babe. How are things in Florida? You know, I've been following the hurricane thing. It's horrendous, absolutely horrendous. So I do hope you're safe. I do hope your house hasn't been flooded, because I saw some really horrendous things, really horrendous destruction. So hopefully you're staying safe. Okay. Lucky Cat, hello, says, hi Dee, I've been watching GC and Platinum since the evening open, made some nice moves. Yeah, Asia seems to be doing some decent moves in the metals. Sadly, I'm asleep at that time, so, you know, it would be a little bit much for me. I do need to, so copper actually follows the Hang Seng Index, Chinese economy, more than other metals. Interesting. So is it positively correlated? That's what I want to ask you. Because if it's positively correlated and Chinese economy is not really doing well, then these shorts that we are technically potentially setting up, they would have merit from that macro side too. So they would have, I like to use like 30% macro analysis in my trading, you know. So for example, if we had crude oil supply in abundance, I won't be looking for longs, I will be looking for pullbacks. And then technically I will find the best area for that. But it's just like it's a tiny amount of the analysis, because ultimately we are intraday traders, right? Lucky Cat said, yeah, it's bad, very bad, yeah. What is FFT? Is that funded something trader? It's going to be another prop firm, isn't it? God, they're just popping up everywhere. I can't keep up. So yeah, copper to me would be a short for now. I don't really see any reason why I would be running longs, especially if, you know, the Chinese economy and the Hang Seng Index correlation is true. So I wouldn't be looking to fade that. So pullbacks and then shorts. Again, not a signal service. Follow your own plan. Don't say, oh, you know, Dee told me to go short on copper and now I've lost an XFA. So don't do that. It's, you know, this is all educational as always. And I'm just telling you what has worked for me in the past. And now you know that I've traded copper before. It was okay. I wasn't that enamored with it. I think I still prefer DAX over anything for London. Because DAX just moves, you know. It's just amazing. Copper futures, yeah. So I'm just trying to figure out the settlement. For PMCT, 1 p.m. Yeah, so it closes, right, so copper closes at, on the nose at 6 p.m. my time, which is noon central. So that would be the settlement for copper. Let me just adjust that. Because I have a little settlement indicator as a part of our Blotic View app. And I can control the time of day when the settlement of the product is. Right, so settlement is actually down around the same sort of average daily range low, average session London low at 4.59 roughly. So that's definitely an area as some targets. Like I would be looking at that as a target today. Wouldn't be looking at a reversal. I mean, I know we have average ranges and stuff, but this has been a very, very large movement that's pretty relentless. Apart from a bit of Tokyo pump up, everything's just been down, down, and more down. So, you know, let's not fight the trend there. And because it's a reversal at a weekly supply, that tends to bring like a fresh single direction day into the mix, and that's another reason not to go against that. All right, so crude oil slowly arriving to my 68. I don't know whether it's going to arrive before we end this, but yeah, 68 is going to be my next area to watch out for longs. I do want to be long on crude oil today. I think we have some scope for further upside. There was a lot of news about supply, ceasefire, blah, 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 but crude oil is a very double-sided product. So every time I try to follow the news that were, like, let's say yesterday or the previous day, it always proves me wrong because it goes into this counter trend move. And I do love crude oil for that because you don't have to focus on news further than the one day. So focus just, it's almost like it's suffering from short-term memory loss. So it's like, yes, we have an overabundance of supply. And then the next day comes, it's like, oops, we fell too much. Can we just buy this up again? And then they go into like a 300 tick move. So, you know, that's just crude oil for you. Do you ever trade ES? I do trade ES, but I usually trade it for power hour. I don't really trade it during London. I trade DAX during London, which is an equity index as well. We don't have it on Topstep yet. So, you know, and don't ask me when it's going to arrive. I don't know. We thought we were going to get it in October. It's not happening, so I don't know. But yeah, so I do trade ES, but it tends to be much later in the day, certainly not for London because it's an out of our session, right? We can have a look at it, but I will not be trading it, not even in a combine. So let's again start from a very large time frame, weekly chart, volume profile. Where are we? All-time highs. Oh joy. There we go again. So yeah, all-time highs always introduces a whole bunch of issues. Yeah, so daily chart, weekly chart, not really telling me much there. Let's go to this. So typical sideways movement for Asia because it's an out-of-hour move. Whether this is a reaccumulation or a distribution, we don't know at the moment. Because we're at all-time highs, I wouldn't be itching to short this. And let's have a look at the intraday setups. Crude oil reaching 68. Let's see what they do with it. So I would want to see, so again, this is my plan, to see some buyers stepping in here and then having an auction fade back up. If we accept value and there's just nobody interested in buying, obviously we just stay out. I wouldn't short it because I have some levels here that are high probability reversal areas. And just as a little front run, I'm going to try a trade on a 35 tick stop because it's a front run idea. I have no setups there yet. It's just an idea. If it reverses, I can add on to that later on, providing that we're not like super far away from the level. So ES, let me have a look at some gamma levels as well. London opening below value, but that doesn't matter. We do have a multi-day bracketing. So we have, what does that mean? It means that we are distributing, right? But again, because of the contextual nature of where we are, all-time highs, I wouldn't be trusting that too much. Usually when you have a bracket and you have, what is a bracket? Overlapping values, right? So it's literally values overlapping each other over a number of days from the same session. So New York, New York, New York, New York. That can mean a potential that we might be in an area where you want to sell off. But not when you're at all-time highs. That becomes a very dangerous game. So for me, I would need a lot of things today to figure out where they want to take it. It is Monday, but it is the end of the month, so keep that in mind. End of the month can bring irrational moves. Let me see what the options levels are doing on ES. Right, so we have a gamma wall at 5,800. And then we have put support to around 57.50 as well. So those are kind of two pegged points where I want to see some sort of a reaction. We're nowhere near that. I suppose 5,800 would be within 10 points. So if we get a reversal from there, that could be an intraday trade. But again, see money, take money is what I will be doing today. I don't think we have any options expiries. There was last week. So yeah, let me see this crude oil. It looks like we are getting a bit of a lift off here. All right, so that's 9 ticks in profit just on a front run of a high probability area. I don't know how far it's going to go. That's a matter of context and a matter of reading things. But yeah, for me, 3 points of interest today on ES would be 5,800, 57.70 as a sort of interim area. There is some average range down at 57.35. We also have that put support from last week, which was 57.50. So all of those are points of interest, areas of interest. But yeah, I wouldn't be trading in between those. I will be waiting for them to hit and then to see what happens at the level. So try and do that. Look at what the price action is doing, how the market participants are reacting, and that is always a better approach than just plowing in. If you plow in with like one contract or something just to test the waters out, that's okay. Just don't go like full port 15 contracts on a whim. It's like there's a level, smash, and then you don't last like 3 minutes. You know, you want to last as long as possible. Like one of the reasons why this is not working out, it's a data trade, you know, data-backed trade. London value high reversals, any value high reversals on crude oil tend to be pretty high probability. But is it going to sustain? I don't know. You know, for now it's doing okay. But now my job as a trader is to look for points that could become a problem and then see if we're breaking through them or reversing. If we start to reverse from them and sustain that reversal, it will be a sign for me to bail. Exactly the same if the trade is going against you, right? You see where the problem area is, and then it's like, is it giving me a bounce or is it breaking down? If it breaks down, I'm out. No need to wait for the 35 ticks to get smashed. Joe says, the joint bid lane was the significance of 68 in crude oil. It's multiple significance. We have value high, we have put support, we have some average ranges there as well, slightly higher up. It was at 68.22, but it's within like the 30-40 ticks zone that I like to look at. So that is the relevance there. It's a round number as well. So market makers do their hedging around the round numbers. And that's why I'm attempting a trade. Now, if we manage to stick away from the 68 level for any length of time, if I manage to get, a bearish or bullish engulfing somewhere, right now this is just a pivotal pop into the area and a momentary reaction. And I now need to wait and see what happens with this. And that's going to be something I'm going to be watching for the remainder of the London session. Let's quickly go through all of these things. MNEK, I wouldn't say that ES is setting up for long or short. Right now it's very balanced and we simply need more data. So I will leave that alone until we get more data, until they try to make more movement. And we're probably going to get some movement because, like I said, it's the end of the month. Any useful correlation between DAX and US indices? Well, there's a correlation across all indices, right, to a degree. But I don't really look at ES when I'm trading DAX. I will have FTSE and I will have DAX on my chart. I will look at everything, but I'm more inclined to look at gold, crude oil, and to figure out whether we have a risk on or risk off or not. So that's kind of my approach to that. Carlton, I'm not even going to try that. Carlin, hope that's enough. Any book recommendation on initial balance or just the Dalton books? Well, I have a book as well, which introduces some of the more evolved views based on data that I've done and research that my company has done. So you might want to pick up Day Trading for Income on Amazon by Market Stalkers. That's me. Dalton's books, I found that they went too deep into certain conditions that were maybe relevant for those markets back then. But, read all of them, right? Read Dalton's books, read my books, read everybody's books on market profile, and then test it all out, right? Test it out, see what works, see what doesn't work for you, and see if you can come up with your own twist on it. That's kind of what I did. I don't use all of market profile because some parts just simply don't work on crude oil. It's like, they work on equities, but not so much on crude oil. What are my thoughts on buys above 26.53? This will be the last question, guys. Okay, it will be the last question. Buys above, what am I doing here? What have I done? Here we go. Buys above 26.53. 26.53. Okay, so buys above 26.53. Yeah, I mean, it's low enough. However, like Aaron pointed out, be careful of the of the profit take moves, and we could get that today. So maybe don't look at today, the end of the month, to initiate new positions, especially if you're planning that as like some kind of a swing trade. So I would be very careful fading the current sort of attempt at a reversal until I get more information. If we do get down there, I mean, honestly, I would be probably looking at 26.20 and even 2600 evens as a better area. Why? Because we have some more balance around there, and then further down, 25.53. So a whole 100 ticks below that. So yeah, this is where the most volume was located. So if they're going to stop, if they're going to do the whole, let's just sell off like crazy people, where is the most likely point that they will have problems going further? That's the whole point of volume analysis, right? Where are we going to have a problem going further? And to me, looking at the large time frame volume profile is 25.56 exactly, right? If we get there at this point of the week, I would be maybe switching my bias to longs. Right now, I have no bias because we're at all-time highs, so anything can happen here. Yeah, so it's crude oil, not crude oil. Gold for me is not at an important area at the moment at all. This is just printing data, and we need to see what kind of a structure we can come up. Because if you look at how they did an attempted reversal before, right? So we sold off. So it sold off 2 days, and then up, all-time high. And in fact, they made an all-time high on this sell-off day too. And then a whole bunch of reaccumulation, boom, go up. But we need structure for that. We don't have any structure here. We have an all-time high and just like meandering away from the all-time high. That's not enough for me to come up with a solid idea of what I want to do with this. But like I said, if I see maybe a failed auction long or something, that might be a decent setup, but it has to be like a super strong area, something like this, right? So we need to have Value high, we don't have that. We actually have value low on gold, so I don't want it. It's against the trend. Gap fill up would be a choice, and that would be a higher probability setup. But where? That's the only problem here. Right now, I don't see where. And until I can see it, there should be no trading, right? At least not on gold. But you look at crude oil, well, we hit the put support, we hit London value high, we have a ASR, London low that was exhausted already. This has merit. So this has more merit than this. All right, guys, that's going to be it for today. Ebook. Yeah, just look for it on Amazon. Market Stalkers, Day Trading for Income. That's the one that deals with market profile stuff. And you will see some of my concepts that I talk about on stream. Auction fades, how I approach failed auctions. I even talk about the time of day as a level in there because I put a lot of stock in time of day of expected movement. So if, for example, crude oil fails the auction very late in the day, I won't take that because I know that the stats of a failed auction fully rotating into settlement is just not a thing. It happened like 3 times in the last 2 years. So that is not a high probability setup. And in fact, I will look to fade that move. So we fall into the initial balance, during New York lunchtime. I will actually try and long that. If it's a short, right, we fell back into it. I will try and long that, and then I will look for the next logical point, which would be either average session range high or maybe some kind of a call resistance level, like anything that I can back the idea of a target with. So hopefully that makes sense. Again, thank you so much for being here. If you have any value from what I was talking about here, please click the like below the main video. It helps us with engagement. It helps us to keep growing this segment. We even found a trade here, so let's keep it going. Crude oil gave us a nice high probability reversal. Enjoy the rest of the broadcast. I will be joining you again tomorrow for London, but then after that, I will only be joining you for Market Talking with Dee on Thursday at 1 p.m. Central. Until then, let's take it slow. It is the end of the month, so expect some more weirdness today. Until tomorrow, I will see you very soon. Take care.